Welcome to the Tomosi Business Training Series. The basis of these sessions is to support the Tomosi Group staff and management to raise their capabilities and performance. This is also a platform to share our experience with young entrepreneurs making an effort to build their startups in Uganda and across Africa. In this session, we continue to explore the principles of basic accounting. Enjoy!
Welcome to Tomosi Business Training Series yet again. Today we are going to look at the accounting for non-accounting personnel. Why are we looking at this area? We have realized that for our work to be a lot easier from the accounting department, we need our colleagues in other operations or in other business sector to first understand what goes in the accounting department, what it takes to produce account, what does the accountants need from other colleagues in operations. We thought it wise, when we do this, then we'll work as a team and there will be an understanding between us and other department. Hence, the objective of this training. We also want other operation staff to understand the impact of their work onto the accounting. Because at the end of the day, you find that any decision you make from the operation side has an impact on the performance or on the production of financial report. That at the end of the day, the operation staff will need to help them take the right decision in operations and in servicing the client and other stakeholders. We are going to cover in this first series of the training, we are doing really the basic training, the basic knowledge of accounting for the non-accounting personnel. In this, we are going to cover what accounting is, who are the accounting users, who needs information from the accounts? What information can be provided by accounting? How accounting information can be used by the accountant and other stakeholders? What is the process, the accounting process? And what is the role of accounting in operating performance control? The objectives of this training are, we'd like us as a team to understand the source of accounting information. Who provides this? Is it the accounting department or other operational staff? Where do we get this information from when you say we are going to produce accounting? Is it generated internally from accounts or is generated outside accounting? We are going to look at that. 2, we need to understand the fundamental concepts of accounting. Why accounting anyway? And do we really need to do accounting? 3, we'll understand how financial information are used in the management decision making. We'll need to look at how we can interpret accounting and financial data and the result of business operations. And finally, how do we use accounting and financial data to control the operations? Those are the objectives that we intend to look at or we intend to achieve at the end of this training. These are the topics that we are going to look into one by one. We have the introducing accounting and financial statements. What is it? What is accounting? What are these financial statements? What is it, or how does it look like? We shall look into that. The balance sheet and its components. Most times we just keep hearing the balance sheet. I need the P&L, the profit and loss. I need this and that. I need cash flow. But what is the balance sheet? And what is included in it? What does it comprise of? we intend to look at that. The income statement, what is it anyway? And does it matter to someone outside accounting? We need to explore this and understand it. Preparing and using a statement of cash flows. I'm sure not many of us, when you go into depth, not many of us would appreciate what a cash flow is. But today, we shall look at it and try to understand what is it and how does it look like. The accounting processing cycle. Just like any other activities we carry, even accounting has a process, has a cycle. It has where it starts and where it ends. We shall look at that. And what does it take? What does it have? What phases or what steps does it take? And what does it involve in the process or in this cycle? The double entry accounting. We used to say, for every debit, there must be a credit. But what is a debit? What is a credit? These are the things that we would like to understand and would like to go through this journey together and get to understand what accountants do and why they do it and for who. Ethics in accounting. Of course, accounts has a department, has ethics that governs it. It's just like a guideline, the do's and the don'ts, or what helps you to become a good accountant or to produce a quality financial report. There must be some guidelines, and these are called ethics in accounting. Then there's what is called managerial accounting. Managerial comes from the word managers. These are geared towards helping managers do their work, take right decision at the right time to drive the business growth and development. That's what we are referring to as managerial accounting. Or we are now breaking it further down into sessions. Session 1, we are going to introduce accounting and financial statements, which entails what it is in accounting, who uses the accounting information, financial statements. The users of accounting information are both internal and external. We are going to explore into what accounting is. Accounting is an information system that reports on the operational activities and financial condition of a company. Who uses this information? Does everyone use accounting information, or is everyone interested in it? No. Although it would be good if all of us would pick interest in accounting, because in one way or the other, we all do accounting. There's no one who can tell me that, I'm not an accountant, so I'm not interested, I don't have anything to do with accounting. Well, you may not have anything to do with accounting, or you may not do accounting yourself, but your actions impact on accounting. That is why we are now going to look at who are these users of financial statements or accounting information. Financial statements here, maybe I just forgot, it's just the summary report that comes out of the operations of accounting departments in terms of income and expenditure, balance sheet, cash flow. These are what we are calling financial statements. And who are these users? Who are these people interested in the information provided by accounting? We have the investors. This is at the level of companies or businesses. Investors. Investors are people or someone who would pick an interest in your business and would want to partner with you or invest, provide either technical know-how or invest in terms of finances, capital, or assets. Someone can say, Tap Media, I've seen you're doing so well, I would want to partner with you. But it's not either a staff or a shareholder. but the person has an interest in what you're doing. So you will come and say, me, I can come and provide, I've seen there's a gap in the studio. So I will come with my assets, or I will come with my technical knowledge and help you develop a studio or construct a studio for you. That is an investor. And what is, at the end of the day, what is this investor interested in? The investor will need an information about the profitability. Profit. There's no one who sets up a business for charity unless you're a non-government organization. But even today, the donor world is encouraging non-profit organizations to set aside investment in terms of income generating, because you cannot rely on funding forever. Even then, even if you don't have income generating, even if you're doing charity, at the end of the day, you need to see how you've utilized the donor funds. So an investor, coming back to our point, an investor will be interested in the profitability of this business or this company that he or she is interested in what? Investing in or partnering in. And how are they going to measure? How are they going to gauge this company that is making a profit or not? Or you may not be making a profit right now, but you have the potential of making a profit in the next 1, 2 years or 5 years, or even 10 years. Some investment takes long to have the return, depending on the level of investment or business you're venturing in. And how are they going to measure this? The investor will say, we need the financial report for TAP Media, so that we can look back and see how is it performing. Right now, is it making a profit? Or if it is not making a profit, does it have the chance of making a profit in the future or the potential? So the investor can only get this information from accounting information or financial report or accounts department. The investor will also look at the dividend yield, price-earning ratio. All these are tools that someone can use to tell that this company is financially healthy or it has business health or going concern. The dividend, at the end of the day, the shareholders, once they have invested in a business and the business has taken off and the business is performing, the financial performance, the profitability is working out well, they will now expect the company or the business to pay them a return, dividend. You've read a number of times when the year is ending, companies are disclosing dividend and so on. The last time I watched was Quality Chemicals, when they say they were not able to pay dividend to their shareholders. So at the end of the financial year, most shareholders, their ears are on ground. Is this company going to pay us dividend? Because you don't invest just like that. That money must come back in the form of dividend or some profit. So an investor, before they inject capital or they inject their intangible knowledge, time into a business or into a company, they will first gauge or evaluate this company using financial report before they make a decision or they take a step to invest in TAP Media or Gideon's Men. Lenders, these are banks, credit unions, or businesses. Here in Uganda, we have very many now. We have money lenders, individuals, who are doing business in terms of lending money. This money is not free. Someone lends you at an interest. So, before you walk into a bank to ask for loan, the bank will be interested. Who is this kind of client I'm going to extend the loan to? Do they have the strength? And how do I evaluate that? Do they have the capacity to pay back this loan with the interest. And how will the bank tell? They don't sit in your business. They don't sit with you on a day-to-day. Neither are they going to appoint one of their staff to come and sit and first study, see how you're doing your business, and recommend that, yes, Coban can qualify for this loan. So the bank will always ask for certain information from both finance side and business side. But still again, the bank or the lenders will need information about profitability. Colleagues, now you realize how important a business or a company must run at a profit, because no one would want to associate with you if you're not making profit. Oh, solvency. You may not be making a profit, but your capital base is also good. So what are you going to do? Someone will say, okay, apart from the profit, are they solvent enough? Do they have the ability to pay back the debts? Because the bank will think, or the business or the credit union will say, okay, at the end of the day, you fail to pay this money, but they have the assets that they can easily, time and again we have seen people's homes, businesses being auctioned by bank or money lenders. If the company has failed to generate profit to pay back these loans or the monies they have borrowed, the lender will walk in and dispose of or auction whatever assets you have. But they don't just take any asset also. When you say, okay, the bank will look at your financial report and say, but your profitability is low. But what assets do they have? They will not just take any asset. They want asset that can easily be turned into cash, that is easily sellable. That's why they're saying ability to pay back. Is it liquid enough to pay back? Or is something that if you tag on, you cannot easily sell? The bank will not want that, or the lenders will not want that. That's why most people always go for the vehicle, because you can't get stuck with the vehicle as long as it's in a good condition. You can easily turn it into cash. You can easily turn a building into cash. Management. These two people above, or these two group of interested parties, are outsiders. But even internally, we need information, financial information, so that we don't run blindly without any sense of direction. The managers or management need information, one, for planning, policy making, decision making, and evaluation. This is what we have always done on a yearly basis during our retreat. We are doing planning. Managers are doing doing policy making, decision making. Decisions are made more or less on a day-to-day basis. Every day we are planning or improving what we have planned. But at the end of the year or mid-year, we converge during the retreat to do the planning. But in this process, do we just walk in there and sit and start talking or discussing? We need information. We need information from the operational side, the work plans, strategic plans. We as well need information from accounts, very key. You cannot say we have done planning, we have made our policy, we have made decisions and evaluated when we are missing financial information or reports. So managers or management require information from financial statements or financial reports in order for them, or in order for us to complete this process of planning, policy making, and decision making and evaluation. Outside, we have suppliers and trade creditors. These are people who are interested in doing business with us, supplying us with services. And these people also are interested in knowing how we performing. How is this business? No one would want to supply his or her goods and take ages without payment. They need information about liquidity, just like the lenders. How well is this company doing in terms of liquid cash, in terms of turnaround, in terms of payment? How quickly can a company convert its assets into what? Cash. That is what the supplier or the service provider will be so much interested in, because they know when I say I'm going to supply you these goods, for example, TAP Media, we do a lot of marketing with the media houses. When you promise a media house that we are going to pay you after 30 days, they expect you to pay them after 30 days. When it goes beyond 30 days, 2 months, 6 months, you're a risky client. In future, they will evaluate you as a risky client, and you don't attract good discount or good price, because they have to factor in the risk, the delay, the holdback. Remember, creditors are interest-free capital providers. A supplier will supply us goods, will take long to pay them, 3 months. We have held the money and we are using it in the business. I don't know if you really understand the logic. If you've ordered a service from NTV worth 40 million, and this payment was supposed to come after 45 days, but you've gone beyond, remember, this money is still with you. You haven't paid it out. So that means, in a way, you're utilizing this money in the business. You've held it somewhere. You've either in the bank or in one of your activities you're doing. So it is an interest-free loan. That's why in accounting, in planning, in decision making, most people, you realize that many people would want to take so long to pay the suppliers, but have their money collected very fast. So you push your client, your customer, pay after 30 days. But you will not want to release money. Because in business things, they say, it's better you take long to pay money out, but have money paid into the company as fast as possible. And Indians, our Chinese are very good at it. But those are business games. In a way, you're managing your cash flow. It's a healthy game in terms of business. Government. Someone will say, but this is my business. This is a family business. Why would you want to think government is interested in my business? Yeah, government is interested. Whether it is a family business, is an owner-managed business, doesn't matter how you came up to do your business, how you develop the company. Once you come to do business, government will pick interest, directly or indirectly. Government needs information. You may not even be required to pay any money. Your business may not warrant you pay VAT, any tax. But the government needs this information to do its planning, to run statistics. That's why we have Uganda Bureau of Statistics. So the government may not even come physically to see what you're doing. But somehow they get this information. Say in Kampala region or in Luzira region, how many businesses are there? What kind of businesses are people conducting in Luzira? What kind of development or infrastructure does this business need from the government? Because in a way, one way or the other, you're contributing to the growth of the nation. So the government will pick interest either directly or indirectly. Directly, which I have not put here, the government comes in terms of taxes, in terms of compliance. If you're a big business like Tomosi Group, you're required to pay taxes in terms of VAT, in terms of pay as you earn, in terms of corporation tax, excise duty, local service tax. You're required to pay NSSF. So all this information needs to be captured and produced for the consumption of the government. At the end of every month, URA is saying, file your VAT, file your VAT. But where does this information come from? They don't come to pick our source documents. How many sales did you make? How many purchases did you make in a month? We need those source documents. Bring them to URA. No. They'll say, file your return. So at the end of the day, accounts department will sit, compile, post this into the system, and generate a report that is sent to URA to explain or demonstrate or show what took place within a month. What sales did Gideon's men conduct? How much was it? How much was the purchases? Are they liable to pay VAT this month, or are they claiming VAT? All this information is generated by accounting or the accounting process. Customers also have interest in accounting. They are users of financial reports to a larger extent, and customers or clients are interested in the long-term stability of the business, the continuance of the supply of particular services. Each one of us have purchased goods at individual basis or a company or a group. We know what drives or what informed our decision. Time and again in accounts here, we have come, someone walks in and say, I want to buy this and that. The question someone will ask is like, is that company stable enough to supply us this? Again, I'll take you back to Gideon's men. We do purchase a bulk of uniforms. We do purchase supply of food from different vendors. Before we go to purchase this, the question will always be, is this service provider stable enough? Aisha here in our neighborhood. Or is this person going to supply us 1 or 2 times and collapse? Then we start the process all over again. So we need customers who will always be there to supply us the services or the goods we need. Because along the way, we also need to establish relationship with our customers such that there's sense of reliability and sense of understanding. So customers will be interested in the stability of the business. The food vendors or these small customers will not come to us for our financial statements. But big clients will be interested in understanding how is Tomosi Group, how is Gideon's men performing, how is TAP Media performing, are they reliable, can we work with them? The NTV has been with us for so long. New Vision has worked with us for years and years. So all these people, they tag because they know the sense of stability at Tomosi Group or TAP Media or Gideon's men. Another set of interested users are employees. I'm sure there's none of us in this room that would want to join or apply for a job in a company which you already even see there's no sense of what? Going concern or stability. Employees are interested in the stability of a business to provide, 1, employment. 2, there are fringe benefits. There are benefits which are outside money or the pay at the end of the month. Employees have so many interests, expectations that sometimes we are not even able to meet. Whereas today, Agnes is interested in the payment at end of month, Juliana is interested in associating with the Tomosi Group, perhaps to enhance her CV, because she's looking at growing, maybe going beyond, so that once I know Tomosi Group is in my CV, I have a long-term target to achieve. So I'm just using Tomosi as a ladder to reach where I want. So payment is not the objective of Juliana. Others are saying, me, I've attained all I need is retirement benefits. Perhaps Tomosi offers good retirement benefit. I can give you an example. In Gideon's Men, some of the guards, or most of them, don't look at fringe benefits. All they know is, I work, I get my salary end of month, full stop. You come and tell a guard about NSSF. We'll say, who is NSSF? I don't need it. You give me my money, I go. Now, their thinking is different from Esther's thinking. Whereas Esther is thinking, at the end of the day, when I walk out of Tomosi, my NSSF should have been remitted in full. The security guard is interested in having month's end pay. So there are various reasons. Other employees will walk in to get an opportunity. What I was referring to, Juliana is not looking at the pay or the check pay. Juliana is not looking at NSSF, but she's looking at Tomosi as the better ground for opportunities. Perhaps Tomosi is the only one that offers in-house training that she has been lacking. So we all have different expectations when we are joining and when we join. So employees are interested in a business stability. Employees are interested in payments, and that makes us stakeholders. That makes us people who have interest in a company or in a business. We are users. And where do we all get this information from? I'm talking about the fringe benefits, the stability, the employment, the promotion opportunities. You can only tell that from a financial report in a way. If you want to know a business can pay you well, you'd want to look at the financial report. By the way, are they performing? Actually, many times we have asked, I've got a job here, or I have applied for this job. Do you know about this company? How are they? How do they pay? So we are interested parties. And how will you know that this company is performing well in terms of liquidity, in terms of capital, in terms of profit? From financial information. Last but not least are the publics. Public people are also interested in a business or a company. They need information about the trends and recent developments. We all know that whenever there's a development or an establishment in an area or a group, let me take, for example, a school. If tomorrow we wake up and there's a university established across the road here, do you know the kind of opportunity that people within this vicinity will have? We'll have to walk-in cleaners, we'll have service providers from this Luzira will take advantage, a lot of things. And an establishment or development comes with associated benefits, directly or indirectly. If there were no good roads here, definitely the road will come. Some of us who have visited Bukasa, we have seen a lot of changes there. Somehow people are fighting, the local people are fighting. But for once now we see there's some good road leading to Bukasa. There are businesses flourishing there. So there are people who are taking advantage of some of those development. And those are the publics. We are neither employee of that the company. We are not shareholders. We are not customers. We are not government. We are not suppliers. But the benefits that someone will enjoy is not restricted to people who are working or who are the owners of a company, are the people within the area. Electricity is brought as a result of Nile breweries. It does not matter. I can now tap in electricity because I live around Nile breweries, or I live along the road that leads to Nile breweries. I no longer suffer inconvenience because the road is good. These are the publics. So the publics are also interested parties to a business or a company. So, colleagues, these are the major or the users of financial reports.
Enjoyed this session? We would like to hear from you. Please give your feedback using the Google form attached or email us at info@tomosigroup.ug and visit our website on www.tomosigroup.ug or tune into the Tomosi Business Series on Facebook and YouTube to enjoy more of our weekly training podcasts. You can also visit our offices at Tomosi Business Park, Luzira, Port Bell Road, or call 0789 901 356.